Smins. Please tell me your name.
Great way to start. You know what? I knew this was coming when I designed my pseudonym.
Yeah.
Very good. You nailed it. Sminston with. You can call me Smitty, Archie. Smitty rolls off the tongue easier. And but yeah, if anybody wants to find me, it's Sminston_with.
On X, that is.
Inspired by the protagonist of 1984. One of my favorite books.
Tell us a little bit about yourself. And I guess I want to throw that over to you so that you get to choose what you volunteer.
Yeah. Well, again, thanks for having me on. It's a pleasure. You're an OG on getting information out there, and I'm glad we were able to intersect here in Prague. I am an engineer by training, and I've converted through becoming a Bitcoiner, decided that Bitcoin had a pretty special data set about it that attracted me to start doing some of my own data analysis, since I had a background doing that anyway. I still work in the energy storage space. Got into chemistry eventually. Actually hated science growing up when I was younger, but started really excelling in my science classes. First biology. Then I thought, well, maybe I can actually hack this stuff now that I'm inspired by the beauty of biology. Let's get into chemistry. And I started excelling at chemistry, and then did quite well in my undergrad, had some awards for my research in chemistry. And then I saw myself going two different ways. I was either going to go the pre-med route, or I was going to keep doing some kind of research. Didn't know exactly what. And in the interim, I spent a year or two in industry, and I ended up breaking towards the grad school direction. And then I went to grad school and started studying energy storage, and used my applied chemistry background and started developing batteries. I guess I'll just come out and say it. Thanks to Tesla, the revolution had started right around the time I was right smack in the middle of school. In the United States, we had a lot of money coming in from the government because electrify everything was a priority. Gone through a number of startup companies, some of which did better than others. Founded one of my own companies. So I finished my PhD and worked on battery development at different scales, primarily for EVs for about 10 years. Right around COVID is when I started to get familiarized with Bitcoin. So my orange pilling was sort of staged out. I had heard of Bitcoin during grad school a number of times, but I don't know how many grad students, I don't even know if you went to grad school, but they don't really tend to have a life.
Yeah.
And so new things outside of the scope of what you're focused on research-wise tend to be like on the back burner. So I just didn't have the time. And I also didn't have a software background.
Did you have a perception of Bitcoin when you first heard about it?
Yeah, I thought maybe it was probably a passing trend, and sort of like, I didn't know, I didn't have anybody in my close circles who came to me and really tried to give me a good serious selling point on it. What I found is people who found it a little bit earlier and took it more seriously early than I had, usually had somebody like that in their life. I don't know if that's your experience too, but maybe if I had somebody who was like, I trusted, and they were like, no, like, you got to get some of this.
I think a lot of people who have been early into Bitcoin were either ideological, technologically curious, or buying something off Silk Road, for example. And so if you're neither of those things, you were just looking for a score. And Silk Road, I think the currency, preferred currency was Bitcoin there, and then you sort of became curious. Or they had a friend who orange pilled them. I didn't have any of those predilections, unfortunately, and I kind of got Bitcoin. I understood the core value proposition. I just didn't understand that it was addressing a problem that I had at that time, even though I was aware, looking back, of certain conditions in the economy, and I was asking questions about, God damn it, why haven't we had a crash that is supposed to happen? I had no conception of money printing. My financial education at university, where I've got a major in finance, as I mentioned earlier, completely miseducated me. They didn't tell us anything about money printing.
Wow, that's surprising.
I wasn't able to identify Bitcoin as a solution to a problem that I had. And inflation back then, as it was reported, and my awareness of it extended to the official numbers being reported, 1 or 2%.
And the targets.
Yeah, 1 or 2%. And you're like, what's the problem? Now we know that's bogus.
Yeah,
right?
But it's the water that we were all swimming in. And
exactly.
So that's really interesting. Yeah, you told me that you had the finance background. So not only did I not have a finance background, I think I took I took a couple of economics courses in undergrad. I was okay with money, but it wasn't like money wasn't
It was not an objective for you, was it?
Grad students, a lot of them, like not everybody, but a lot of them are kind of like in some way putting life on hold. And so they really kind of start getting their own financial act together usually right afterwards. So I kind of fell into that camp. So once I started kind of being like, okay, I need to do a lot more, I have my future financial requirements. What am I preparing for? What are the different, what are money markets? What are these different tools? And then, thinking back about the economy again. Yeah, again, Bitcoin had come up probably a couple times. But my actual entry into Bitcoin was once we were already all locked in during COVID. Bitcoin had come up again, but it was also concurrently with all these altcoins and, of course, the infamous Dogecoin. Regrettably, my entry was actually, funnily, I think it was, I bought Dogecoin because I thought some of these were like a joke. And I hadn't had the deep dive yet to understand the distinctions between like Bitcoin and all the other sort of like the hyped up coins, and then of course Dogecoin. But what did happen was I bought Dogecoin, and it went up so high. I could not believe how much money I made on this thing, and I was laughing every day for a few weeks, and I sold it all. And I went and told my friends and family. I was like, I cannot believe I just made this. I just made enough money
Crazy
here.
amount of money.
It's almost like a nest egg amount of money, and I'm never going to do that again. Then I started reading about Bitcoin. I think I started reading. I believe I was starting to read Saifedean's work.
Bitcoin Standard.
Yes. Mm-hmm. Yeah. Which is still one that I recommend to my friends when if they'll take to it. Understanding the difference in monetary policy, which is really and then questioning the whole system. I have one family member who's been a lifelong critic of the Fed. So he had started becoming interested in Bitcoin as well. So he and I kind of we were kind of like in the kind of partners in crime as far as like doing deeper dive investigation into how it works. Then I was like, I got to put together my whole thesis about what money is in general. I just have to do that at this point. Also concurrently, I had a Twitter account for years that I just like never used. But during COVID, I found it was actually like the best way to get, not always the best news, but you could get the most of it the fastest. So I was like, I shifted the way I was consuming just news and information in general from the outside. And I was able to understand a lot of the information was like about Bitcoin too. So I started following Bitcoin accounts. I was trying to separate out the signal from the noise as best as I could. I started noticing there were some models floating around. Like there's the stock to flow model from Plan B. And I was kind of like, oh, this is interesting. And so a lot of influencers are like routinely bringing this up on their shows. Yeah, I mean, I credit to those influencers, even if they weren't pure Bitcoiners at the time, they at least were educating me to some extent with Bitcoin. So my conviction kind of was building because of the fundamentals of Bitcoin. But then I started doing a lot of my own data analysis, pulling the data, understanding how the mining works and how Bitcoin's protocol works together with these models. I was kind of like, okay, there's something here. I didn't really quite understand that like stock to flow was kind of a nonsensical model from the start. But anyway, over the kind of like the course of a year or two, I was getting more and more invested into it, like in a serious way. I was also starting to build a family. So I had to, kind of not expose myself to too much risk because I wasn't the only one involved at that point,
You start managing risks very differently when you've got other people that you're responsible for. Yeah.
So I didn't want to act irresponsibly, so it was kind of baby steps. Then I discovered the power law, which is something I'm sure we're going to talk more about. And the power law stood out to me because, having a lot of engineering and sort of physics and chemistry training, I was like, I'm not a financial guy, but now I'm starting to read like that this sort of clean data set, it just doesn't show up a lot in economics or finance. But of course, that's your background. And the more I dug into that, the more it seemed true. Power law being sort of one of the key properties of it being something that is self-similar over many orders of magnitude of scale.
Do you find that is the most extraordinary aspect of Bitcoin's power law structure?
The most impressive aspect of Bitcoin, or the
of the Bitcoin's power law model,
the self-similarity.
Yeah.
So I have to give a shout out to Giovanni because he's a corp. And the reality is, I think some of his content is what I caught wind of, and it was around the same time. So stock to flow started failing right after 2020, and so I was like, well, I guess that model wasn't working out. And I was like, oh, stock to flow is actually an exponential. Exponentials are inherently unstable. They're doomed to fail at some point. In fact, all of the bubbles of Bitcoin are each exponential growths and crashes. It happens repeatedly. But the power law, there's so many cool things about power law. One is the orders of magnitude of scale, right? They're sustainable. They're self-similar. And other systems that are self-similar are like fractals, where you see the zoomed out like on a map, and you zoom in on a coastline, it looks a lot like so. Another cool, factoid is that you can pull out from power law relationships is you can get cool math relationships. One of my favorites is a heuristic that I call the 10x 50% rule. Roughly speaking, but very reliably, every time Bitcoin ages by another half of its own age, so another 50% of its age growth, it'll do another 10x in price. And so you can check that, and you can draw a box around it the first couple of years of life. You can do it over the first 6 years of life, and you just keep doing.
What are we at now? 17 years.
17 years of price history.
So in another,
like roughly another
8.5 years,
8.5 years,
we're going to hit 650,000.
Well, the nominal, we are a little under trend right now because it doesn't follow it perfectly.
It feels that way.
It's the average. Mm-hmm. So let's just say it's like a little over 100K right now. But yeah, call it like roughly 1 million in about 8 years. It's like roughly about 1 million, a little over 1 million. So 2034 would be the target.
It's extraordinary, isn't it? How accurate it has been.
Yeah.
How much faith do you have that will hold?
That is a big question.
Because first of all, let me just say the data is like irrefutable. Like the data is the data, and the model clearly shows what it shows, and it's fitting to a power law, right?
But is it going to go on infinitely?
Yeah.
I don't think so. Yeah, I appreciate you asking that question.
How does the power law break? Or how could it break?
Okay, well, do we have hyperinflation? So have you seen this hyperbolic model? So the hyperbolic kind of looks like if you're, log scale, right? So it looks like it's got the bendy curve. So you have the diminishing, like the slowing of the CAGR, right? Mm-hmm. Which is actually what we see now, the diminishing. Yep. But then there's a midpoint, an inflection point, when then the acceleration starts to pick up again, and then it shoots up asymptotically. Right?
Is that like the S?
It's like an inverse S curve.
Yeah.
So it's an S. It's an S this way, not.
Gotcha.
People can't see me, but so you've probably seen that one before. That one's fun, but it's really hard to predict if we're actually going to have that's hyperinflation is not guaranteed. You probably studied past currencies; they don't all fail that way. Mm-hmm. And it also is completely arbitrary as to like where you're going to pick that inflection point. We don't have any data to support when that's going to happen. So it's not that
I think a lot of people who subscribe to an S-curve adoption model where we see, there's a phase where the diminishing returns, we see that plateau, and then it kicks off again in much the way you've described. Mm-hmm. There's a series of factors that I think are assumed will happen. One of those things is that a culture of hodling will take hold, and there will be a sort of reflexivity in the price action as adoption accelerates while hodling also takes hold at a mass scale. And then there's going to be a reflexivity in the price such that we see that acceleration.
Kind of, and that would be like, now it's starting to be kind of violently driven up by demand crunch.
I mean, we've seen lots of analysts.
Supply crunch.
We've seen lots of analysts say higher prices will just lead to more supply in the market, right? So that will fuel the sell side.
Right.
But I'm partnering that with an increase in hodl culture, an acceptance that Bitcoin, its finite supply will result in people wanting to hold it more, and then a conviction that that's going to lead to higher prices.
I think what's interesting, what's going on that's paired with that might be a missing piece is that due to this self-similarity, right, we have a similar proportion amount of people who are selling, because most of us, if we're honest, we're largely living in a fiat system. And so people think that they're rich after a cycle. I haven't experienced a full end-to-end cycle like that myself quite yet, but I've talked to enough people to go like, you talk to people like they made out great. They're, from their viewpoint, they're set for life in fiat terms. And so like a lot of those old school holders, those long-term hodlers are starting to sell. And so that sort of is the balancing factor to people that are coming into the fold and starting to accumulate and hodl. I think there's like a proportionality constant there kind of that comes along with that, as opposed to just everybody hodling ad infinitum, and then it just keeps. Yeah, but the S curve. So a normal S curve would be like a logistic. So you've got like a technology adoption curve. Giovanni talks about this, but there's a great book by Jeffrey West called Scale. Have you? I've
heard of that. I haven't read it.
I think you would. I mean, just kind of picking each other's brain at the beginning of the conversation, I think you would love that book. It just talks about power laws in general. The way and what's cool about it is there's so many cool things. We talked about the price and time heuristics, the self-similarity, but that also is like how a lot of natural systems build themselves and then are persistent. It's like we've still got the city of Rome today, right? Cities and the number of streets and like nodes within a city and the way it's connected They tend to have these growth constants. And one of the unique characteristics about a power law and the way you know something is a power law is if you take that price and time graph, instead of letting it just be a hockey stick, you log transform both of them. It's a basic math operation, logarithmic transform, and you get a perfectly straight line. I like to call it the line that you can't unsee. It's just like, and the prices, it's just totally undeniable. I'm sure you've seen it.
Yeah. It's probably the most striking representation of the power law that I've seen, where it just
it's like the most impressive way to
a regular chart into a log price and then log time, and then it just converts into this straight line. You're like, oh my God, is it really that predictable?
It was so BTC Prague, I gave a keynote talk yesterday actually, and I kind of do an explainer of the importance of that line that you can't unsee coming from the power law. And we go through, I talked about stock to flow earlier on. There's a couple of other models that it's like, if they're falsifiable, we can show where they've failed. And then there's other models that come along where it's just, this is a total what if scenario. Like there's a supply demand model that's been going around on X and social media, drives me nuts. But because it's like peer reviewed, all the influencers throw it up there and go like, this peer reviewed paper shows a model that Bitcoin's gonna be 700, it's supposed to be 700,000 this year, by the way. We're like 63,000. So
that's not going to happen.
There's a lot of cherry picking of parameters to be like, well, this could be the supply parameter, the demand parameter in the future at some point, and it could spike the price. Okay, well, that's not very predictable. So if you start pressure testing some of these other models, they just don't fail basic statistical tests. So we covered some of like the cool features of power laws in general, and that Bitcoin follows it. The gold standard is the out of sample test. And so in my talk yesterday, I showed if you take the first 6 years of data, so out to 2016, the good data starts in 2010. So 2010, 2016, and then you stop the price data there. And you build.
What do you mean by the good data? Because like some people I speak to, analysts, all right, they will say, from day one, that's all relevant. It's all relevant to Bitcoin. But you're like, hang on, but there was barely a market in Bitcoin. And it was incredibly, volatile. Because there just wasn't that level of liquidity and interest on both sides of the buy-sell side, right? So, and that probably resulted in all kinds of, I don't even know if I should call them anomalies. Let's just call it volatility. Yeah. So is that what you're referring to?
The pizza buys? No, I think the liquidity, the depth of liquidity and everything like that. I think I'm more on the side of like, let's start using the data that's starting to be collected by actual exchanges. And so I tend to use, it's a little bit splitting hairs whether you're choosing July 2010 or like October 2010. Yeah. If you run the math and the models, you're going to get like pretty close. But there is a debate to be had there.
Because there's a particular line that I sometimes like to draw when I'm feeling bored. And it doesn't start from the very beginning of Bitcoin. There's that sort of initial Big Bang phase of Bitcoin, and then it's the rest of it. I don't know if it's year 4, 5, 6. Can't remember. But then there's this kind of very consistent channel that it
like a TA type channel.
Yeah,
I mean, no, I use all that data. I know you're talking about. You're talking about sort of the first bubble. Take all the data up to 2016, and then in the test, you run blind for all the data since 2016. So now we're in 2026. So you don't include any of the data from 2016 to 2026, build the model, and then you overlay the data that actually played out between 2016 and 2026, and that data just traces the model. Those are the same Bitcoin. There's only 2 parameters in the power law. That's another great thing about it. It's elegant. So you have that model there. The price fits it perfectly. And then you do the same thing with all the data from 2010 to 2026. And then the 2 models overlap to like 1,000th. So that was one of the cool things I showed yesterday, where it's like the value of out-of-sample testing is you show it was actually predictable over those 10 years.
So we're talking about the power law and how it could break.
It's very likely it's going to undergo some sort of phase shift and fail at some point.
So I think I love the power law model. I love it. It's beautiful. It's elegant. Clearly, like it shows that it's holding, but I also think it could break quite easily because, and I know that, Giovanni and others have spoken about, actually this is replicated in the way that, cities grow, nature, all that. We can see it in different kind of ecosystems, but Bitcoin's a digital ecosystem. Well, we don't have the same physical constraints.
If you press him enough, he will admit that it's it can't go on forever. And I think right now everything's priced in dollars. Energy's priced in dollars, but things are going to change.
Why can't it go on forever?
Well, you're going to start running into constraints. And the problem is right now that typically the way that we price things in Bitcoin is we go through the proxy of fiat, right? We do the conversion factor through first you go to dollars, you go to euros, and then you go to X asset. But what happens when, as we talked about earlier, I think before we started recording, governments have no choice right now but to continue the, increasing the rate of printing.
And it's accelerating,
monetary
right? Every
debasement.
time, every crisis makes it a bigger bailout, a bigger QE policy or period of policy.
Yep. But eventually, like Ray Dalio says, the global, what do you call it? The global...
monetary reset. Yeah.
Yeah.
The
sort of like,
order.
Debt repricing together with like, we're repricing and something else. Once this sort of happens, because the question always comes up is like, how do we know how many Bitcoin something costs? Like when fiat's not even involved.
Yeah.
It kind of goes to the philosophy of like Jeff Booth. We kind of get back to a truth environment when we remove inflation. And like for the corrupt fiat system is the lens through which we filter everything that we price in Bitcoin.
Yeah. I mean, I wonder if we'll only discover the true value of Bitcoin when we price commodities in Bitcoin directly.
A lot of different ideas of how that's going to play out. I was talking to Matthew Masinskis about some interesting things that we're looking at, like volatility of other assets. So like the stock market. He by the way, he's such, he's like a ninja when it comes to like all these, the debasement values. He has, it's like an encyclopedic.
Yeah, he's great. He's one of my favorites.
He's one of my favorites. Yeah, he's a great guy too. But there are some interesting convergences with like volatility and the returns of Bitcoin, like in the late 2040s, maybe 2050 at the latest, where we just kind of, when I talk to him, we think something's going to happen in that range. And, people use the term hyper Bitcoinization or like ultimately moving over to the Bitcoin standard. Things end up being, it's possible. But right now it's just, you look at what's going on geopolitically, it seems like the dollar's still going to be around for a while.
Yeah, I mean,
it might be a slow. It could be a slow death.
I had Jeff in yesterday, and we had a really good conversation, and that was my contention. And he's a true believer.
Jeff Booth. Yeah.
Sorry,
Jeff Booth.
Yeah, Jeff. Oh, yes, he's fantastic.
Yeah, absolutely.
We had a really good conversation, and he's of the belief that it's going to happen. That hyper-Bitcoinization is going to happen. It's going to displace all fiat.
Yeah.
And I was of the opinion that, my pushback was that, so long as there are functional states, they will retain the option to issue fiat and even enforce the use of fiat within their borders. And so it's going to be a difficult thing. Even though we might have increasing Bitcoin adoption, it will be in parallel with a fiat system in functional states.
I see that there's like really two growing camps right now, and there's growing division. You see like kind of the Sailorians, right, where you're building layers of like the digital credit narrative, even long term, like a digital. Because it's hard for me. Jeff Booth is brilliant with his philosophical ideals, and I think it's directionally like correct and true. But practically on the ground, it's hard for me to imagine societies existing that are purely operating on a money that's deflationary. When, as a society, to push society forward, we develop new technologies, try to scale them very quickly. We try to do Mars missions. Sometimes we have to go to war. How do you, without like some means to raise debt or have some sort of like equity layer or whatever, digital credit, it seems almost like more like a human nature thing to me. Like they will find ways to borrow, accumulate a massive amount of debt so that it can finance X thing, whether it's a virtuous thing or not, through the way that they always have. They always build the fiat systems back up. And unfortunately, their corrupt systems in a sense is in a sense that it oppresses all those who are not benefiting from it through, say, like the Cantillon effect. And that seems like a human nature thing to me. Yeah. As opposed to we just have this deflationary money that we use that's like, it no longer has to be a store of value anymore because we use it for, as money, as actual money. That's the future that I...
Have you priced Bitcoin in other currencies where the power law has broken? Because it does seem to me that we're looking at it almost exclusively within a US dollar BTC exchange rate. And I'm like, well, why should that be the framework that we look at it to determine whether or not
I think there are some like really low volume fiat currencies that I haven't looked at a large
Well, we can look at some countries, like, for example, Turkey is a great example. Because
the lira.
Bitcoin adoption is high. There should be enough volume there to be able to, do some analysis with the data. And it's a country that's experiencing hyperinflation as well. And so I imagine those combination of factors would lead to the Bitcoin power law the model breaking price in Turkish lira.
No, I think if we had a hyperinflation scenario, I think that could happen. I think hyperinflation scenario could break the power law.
Do you think a Bitcoin strategic reserve by the United States government could also break the Bitcoin power law?
No, I think that would actually support the power law.
But, okay. Yeah. The power law, as I understand it, please correct me if I'm wrong, is predicated on a particular, what's the word I'm looking for? A graduated level of adoption where the biggest players, sovereign wealth funds, adopt that scale last when Bitcoin as a market cap asset is large enough to absorb allocations from the largest pools of capital. But if we see the United States government leapfrog that and say, we're not waiting until all the small countries, the middle countries, the corporates, all of these entities adopt Bitcoin first, and then it becomes a large enough pool of capital for us to then allocate. Because that's the assumption on the Bitcoin power law model, is that largest pools of capital allocate last, and there's this gradual sort of ascension up the capital allocation market, a ladder, I should say.
Make sure I'm understanding what you're saying. So the Bitcoin treasury doing this?
No, the strategic Bitcoin reserve by the United States government.
Yeah.
So I would assume that's the final boss, right? China and the United States government, the final boss of Bitcoin adoption. But if they do that suddenly, like 20 years in advance of where the power law might have assumed they would allocate, doesn't that leapfrog everything? Doesn't that give the green light to essentially every financial entity in the world to allocate?
What's the well, you might know better. What's the difference in potential market size of what that treasury would be versus all the sovereigns and all the other nations combined, cumulatively?
Specifically, I can't recall off the top of my head, but we have discussed numbers in the hundreds of trillions when looking at the pool of global asset pool. I think Jesse Myers came in for an interview, and it's something like $300 or $400 trillion worth of assets globally, right? I don't know who holds all of those, but that was across asset pools like real estate, fixed income, bonds, all that sort of stuff.
You say,
gold.
Okay, that's why I'm confused. You say leapfrog because I see the U.S. as being a part of that, the rest of that cumulative sort of dominoes falling. Strategic reserves happening for nation states and sovereigns across the world. Versus just in the U.S. being one, but unless I'm missing something.
Let's take it back to the beginning. We spoke about the type of person who first adopted Bitcoin, and they're kind of like misfits of society, right? Like cypherpunks, political dissidents, perhaps people who are on Silk Road, ideologues, for example, and
early adoption weirdos.
I mean, they're the weirdos of society.
In a good way.
There's no doubt about that, right? Yeah. And now we're seeing, so there's a progression. I would consider myself as like the early part of mainstream adoption, having bought in late 2020. Right?
Yeah,
very early amongst the mainstream.
That's a good way to describe it.
I'm not an early adopter, right? I don't tend to adopt things early on.
Yeah.
I might express my curiosity.
You're on the late side of early adoption.
Yeah, but I'm early part of mass market most of the time. And so then you get sort of like early adopters, early mass market, mass majority, and then like the laggards at the end, the boomers at the end, right?
Yes.
And so, all right, so that's people. And then if we have a look at institutions, larger entities. So the first financial institutions that come on board were not necessarily small, but they were more nimble because they had either a larger risk appetite or they had a very strong principal owner, like, Paul Tudor Jones, Stanley Druckenmiller, these sorts of hedge fund managers who were more open-minded, risk takers, and they had the imprimatur in their firm to be able to make a decision and say, this is what we're doing. And they did it, right? And so many of their cohorts that were more sort of institutionalized with sort of a conventional institutional board, a corporate style of management, would have been far more risk averse and later to the party. And some of the even larger entities came after them. So they were like the mavericks within that pointy end of risk-taking amongst the financial institutions. And then
so you see the
BlackRock
steps,
is really a unique, like BlackRock coming in with ETFs.
Yep, I bet.
I would have expected actually institutions that were a lot smaller to start off in the ETF market. But then coming on board...
Grayscale.
Well, yeah. I mean, Grayscale is a crypto-native financial institution that innovated that space, right? And when BlackRock was a big gorilla that sort of accelerated financial institution adoption into Bitcoin.
Yes.
And now I think that compelled a lot of other organizations that would have otherwise held back. And I suspect, so my proposition is, would the United States government be the equivalent of BlackRock stepping into Bitcoin? Because if we take that sort of progression of adoption and overlay that to sovereigns and sovereign wealth funds.
Because so far what you described sounds very like the natural progression we would expect. Right?
Smallest outliers, people who were compelled to do so because maybe they were debanked or just on the fringes of society. And as a result, they just followed necessity or curiosity, right?
Yeah.
Whatever led them. And then we have small countries like Bhutan, El Salvador. And so you might think if it follows a similar sort of trajectory, we will get maybe smaller, innovative countries like in the Scandinavian countries, maybe New Zealand, maybe Singapore, these more forward-looking, independent-minded countries. Scandinavians tend to be adopting technology earlier. Right. Singapore has that really strong leader archetype, and so does El Salvador, right? So that's where we're seeing it in a similar way to like the hedge funds that I just profiled before. So you can see that trend and you're like, okay, and then from there, maybe the middle countries.
Yeah. It seems like it's a little bit of a mix right now. In fact, a lot of the private entities have way more Bitcoin accumulated than all the nation states combined at this point. And so we haven't seen that. Yeah.
That's my thinking is that as the adoption scales to entities that are larger, Bitcoin's market cap expands. That expansion then makes it more attractive to larger pools of capital. Those larger pools of capital are controlled by much larger entities, sovereign wealth funds and sovereigns, or, like the Vanguards and BlackRocks and whatever.
Fidelity,
And so like even BlackRock as a financial entity hasn't really allocated to Bitcoin much at all. Like it's really on its own balance sheet.
Correct.
Not through
not on the that's exactly.
Right.
Yeah.
So as a fund manager, it's
very
hardly
little.
allocated.
Yeah.
But it's starting to embed it into its, is it the Aladdin model of like 1 or 2% allocation? What is that? And they advise like 30 or 40 trillion globally. And they manage 10 trillion of their own that runs through that model, right? Yeah. So that's massive. That's a massive change. Are we seeing that flow in yet? Not yet. Like we're not seeing 2% of 40 trillion. Right.
No, all these scenarios is like, imagine when, all these entities that you're describing get the 1%, the 5%, and it's just like the numbers start to explode.
So my logic is that the level of adoption, the entities adopting is scaling up. That's expanding the market cap of Bitcoin, which is then making it easier for larger entities. But if we get a leapfrog of like we got BlackRock with their ETF, launch, right? And so their distribution is like unrivaled, right? And if we suddenly get the United States doing that same leapfrog, so what they do then is it makes it at least a discussion in the European Union, Germany, France, whatever.
I guess like I still see that as part of the natural progression. I think as far as I understand it. Well, yeah, because like we've seen that leapfrog happen at a prior era in Bitcoin. It's like each of these are sort of different era, right? You described the grayscale. We saw leapfrogging with the ETFs, but we didn't see the allocation on the balance sheets take off totally widespread. It's a relatively concentrated number of entities. Yet these events, they take the price essentially to another order of magnitude of scale. And so I don't think it happens in sort of like the smooth fashion. Well, naturally, retail is becoming a small and smaller proportion of the overall adoption share. And so as the entities start to grow that are not private, self-custody hodlers, for example, that's smaller and smaller. I don't see it as a leapfrogging. I see it as somebody takes the first step, and then it's sort of like the dominoes fall at that scale. And I think that scale that we haven't seen yet is that like the nation states getting up to the level of allocation that they could. That's so much larger than even just the private companies, the public companies with the ETFs. That's what I think we can expect would be around the corner. And that's the reason I say I think that would support the power law. It's the scaling law. So it takes us from that hundreds of thousands to millions, which I think is what we expect. So it puts us in that ballpark, maybe not in a clean way. We might have a bubble. We might be a little bit more punctuated. But I think what we always see, the price tends to return back towards the marginal cost of production. This is another topic. Have you noticed how the volatility is always to the upside for Bitcoin? That's what the bubbles are, right? And then they kind of, you can shift that power law model when it's in log space down to the lower end, and it forms like a very nice support line. There's a lot of work being done. I do some of this myself, but there's others who do it better, showing that that's actually kind of where the cost of production on the mining side lives for Bitcoin, which I think is really interesting. So what I would expect is that, call it leapfrogging, call it, the first domino falling, kind of another pretty big event, which then incentivizes other nation states to partake because somebody else took the first step, opened up the door, they all pile in, gets us to sort of the $1 million-ish, like that sort of regime price.
4-year cycle, mate. Is it dead?
Oh my gosh. I am open to it not being dead now. What I really care about is, first of all, I don't think it's going to continue with 4-year precision. 3 things. I don't think it's going to, my thesis is that even if it turns out that this year, it still looks like it's in play, I think it's naive to think that it's going to continue forward because we're still dealing statistically with a sample size of 4. That's statistical power. You don't have to be a genius to know that that's like nothing. The question is, are Bitcoin's economics explaining that sufficiently? I think they were with the first 2 halvings when you're talking about, the inflation rate dropping by half from like 24% to 12% or whatever. But now we're talking about dropping from like 2 to 1%.
The halving doesn't make sense to me logically anymore.
It doesn't.
And I'm much more inclined to believe it's actually just in alignment with the business cycle.
That's where I'm at. So I'm in the business cycle camp. So a lot of my work for the past year or so has been looking at proxies to the business cycle. So you're probably familiar with the PMI, copper gold ratio, a bunch of things. Yeah, a couple of these macro indicators.
Yep.
Yeah, and you can build a pretty nice composite model out of these and do a regression. It's tricky doing regressions with these because now you're kind of building like a little bit of a spurious correlation. But they definitely co-move together really well. And actually, Plan C, he and I put together this article on X late last year showing that with each passing cycle, these bubbles. Have you seen that chart where the bubbles of Bitcoin sort of like overlaid with the PMI and also the copper gold ratio? They happen concurrently. They move up together. They move down together. So like just by eye, it sort of passes the eye test. But if you run the statistical correlations, the moving R-squareds and things like that, the co-movements strengthen over time with each passing cycle. And so, in fact, if you take the last half of all Bitcoin's data, like the last 8 years, roughly 8 years, and you just run an R-squared on the past 8 years, it's like 0.51.
What does that mean?
It means that in statistical terms, using a PMI-based model or the business cycle model, for example, explains roughly half of the fluctuations or the deviations from the power law, however you want to say, like the bubbles, which is significant. That's not to say that 0.51%, that's over 50%. So R-squared is sort of the gold standard of how well does a model represent the data that it's trying to describe. So 50%, people are like, well, shouldn't it be like in the 90%? 50% is really good for like almost all data sets in sociology, economics. I mean, they usually consider a pretty strong correlation in the 0.2 to 0.3 range. So 0.5 is crazy. And it's every passing cycle, it's strengthening. And I think it's pretty Now, here's another thing is people say, well, the ISM PMI started in 1948, like the Institute of Supply Management version of PMI. So it's been around for quite some time, and anybody can download this data. I love playing with that data set. It's not 4 years until the instantiation of Bitcoin comes around. And I mean, what do you know? If you look from peak to peak, it's like roughly 4 years. And Bitcoin's peak to peak cycle trend has been about every 4 years. The 4-year cycle theorists, as I call them right now, who are just like, no, there's something magical to Bitcoin that's keeping it to this 4-year timing, and they kind of lean on the halving explanation, which I'm like, well, but then you can't explain away the business cycle, and also it hasn't always been 4 years. It's only been every 4 years since 2009. But what happened right before 2009? The global financial crisis. And so the average peak to peak cycle for PMI, I think, is like to 3 or 2.7 years, but there's variation. So for whatever reason, since then it's been pretty cyclical. But there's no inherent reason to Bitcoin, at least. So yeah, I expect it to break. Here's one way to look at it. If we do end up having a new all-time high sometime the rest of this year, which is looking less and less likely as we get through June, but even if it happens 2027, 2028, or even like the first half of 2029, that will then invalidate 4-year peak to peak for the cycle.
Some people were modeling
gold
to Bitcoin, and it looked like, at least 3 instances of gold running before Bitcoin. And when gold plateaued, it appeared that there was a capital rotation to Bitcoin. I mean, we shouldn't even say that.
Yeah, we have to take it with a grain of salt. I'm one of the guys too. Yep.
Bitcoin started running. Whether or not there was a capital reallocation or rotation, we don't know. But that pattern was like 3 or 4 times it happened, right?
Yep, correct.
So gold's recent sort of bullish run, people were expecting something similar to happen.
Yeah.
And then we had the AI bubble. I think it's still very early on in the AI bubble. It's nowhere near overheated yet. Yep. Yeah, I think so. If I model my experience of the .com bubble, when that became a genuinely hot bubble was when people were able to get enormous amounts of capital based on reputation, based on merely ideas, and they were listing with mere ideas and reputations, and then saying, well, this is analogous to something else that's also got a crazy valuation, and everyone was just piling in on it as though it was the next shitcoin sort of. It was exactly the same dynamic. At the moment, what we've got happening is, you could say that the valuations are crazy, but they're legitimate businesses with legitimate technologies, and they're rapidly improving and rapidly being adopted. The .com bubble, if you just do a line on the NASDAQ and watch that deviation off that line, that 30, 40, 50-year line, that was significantly greater, and I've done that. It's significantly greater than what we're seeing now. We're seeing only a minor deviation from the long time.
You're talking about the first one, the 90s one? Or
the late 90s, early
late 90s,
2000s.
Yeah. Yep.
And so the current AI bubble, as modeled on the NASDAQ deviation from the long-term average, is tiny compared to 99 tiny. It hasn't even started yet. And then when I have a look at the sorts of things that are being funded, you can say SpaceX is overvalued. Fine. You can say Anthropic is overvalued. They're going to get $1 trillion valuation. OpenAI, something similar. You can say that's overvalued. But a whole bunch of investors saying, actually, we like the numbers, we like the traction, and we're going to allocate to that at this valuation. And they've all got legitimate business models with growing bases of customers. Right. And the target addressable market is the whole world, quite literally. And it's actually happening, whereas the .com bubble, people were projecting everything will happen in the future on the internet. Yeah. But nothing was happening on the internet. Nobody was buying anything.
It's more like a land grab sort of effect.
It was, And so I see significant differences. And so I think it's kind of taken the shine off Bitcoin. We were expecting gold to plateau, Bitcoin to run, and Bitcoin's actually had just like a deeper drawdown as a result, because they said, no, actually money's going to AI. So I'm like,
I think
when are we going to get out, turn in the sun again?
Sure. I do think it's a good point. Whether it's a bubble or not, I think there is going to be the way that these work, right? I think that the capital allocation is going to get above its skis, right? I think there's also infrastructure limitations, which you may or may not have looked into in the US. I don't know exactly about Europe.
So energy, chips.
From the energy side of things, transformers, grid regulations, local, because all of this is when you get to the local level, everything matters local in terms of the regulations. I mean, they're starting to become years behind, if not becoming indefinitely canceled for a lot of the AI projects. It is kind of interesting where there's so much money flowing in so violently, but we're almost not ready to receive and deploy the level of demand that we're seeing for it. So it makes me suspect at least that we're going to see somewhat of a bubble effect. I haven't analyzed exactly when I think the timing for that's going to be.
Can I ask you though, won't capacity constraints make them more profitable as their models become more efficient and effective?
Oh, the actual LLMs.
Yeah. If we've got a capacity constraint, but they've got models that are getting more efficient and effective, suddenly not everyone can have access to it,
right?
Which gives them pricing power. And they become more profitable.
Haven't
so
thought
it's not
exactly
necessary
about it like
that everyone
that.
has access to LLMs.
Sure.
It's just that the people who are willing to pay the most.
Well, yeah, I think that's a good point. I wonder if there's a difference between their pricing models for their customer base, which they're not going away. The demand's only getting better. But there's a difference between that and capital inflows into the actual technology. Wouldn't you agree?
Yeah, because they're still building out. They're still building out.
Right. So on the inflow side, I still imagine that there's going to be a little bit of a supply-demand imbalance.
But I don't think they're capital constrained. I think they're resource constrained. Chips, water, energy. I think they're the constraints, right? Because the supply chain can't manufacture them fast enough. But capital is infinite. If there is a demand for the product, the capital will
okay. Well, there you
fund
go.
that. But if the supply chain can't catch up to the demand, that's the constraint that I see, not capital.
You could be right about that. I'm not. That's not my area. Where I agree is that I think AI is undoubtedly taking some of the shine off of Bitcoin at the moment.
You feel that?
Oh yeah. Absolutely. I think it's crazy to think otherwise. And you see, and look at the hash rate. Look at you've seen the miners capitulating, moving over to their ASICs over to.
I think that's a good thing for Bitcoin, actually.
I think it can be too. I want to hear your reason first.
Well, I think it's going to decentralize Bitcoin mining.
Okay.
So what's happening is, they're all moving away because AI compute is that returns more, it pays them more, right?
Yep.
That's fine. So all these corporates, especially listed entities, are going to move over to AI compute. Well, what does that mean? Suddenly it means that instantly that disperses the concentration of Bitcoin miners. So the ones who are remaining. And then the focus...
Decentral, right.
Yeah, the focus turns to people who can mine independently rather than these conglomerates building these massive data centers to mine Bitcoin in a centralized way. And so I think that eliminates a risk of mining centralization.
I always think there's room in these conversations, and I feel having been through BTC Prague for the last 3 days, talking to more Bitcoiners in 3 days than I ever had in my life. I think it pays to have discussions around just talking about supporting Bitcoin as a technology without price in the picture and just strengthening it as a technology and actualizing it as the more perfect money that I think we all think it is. And so price can be secondary in that, and the infrastructure can strengthen without price being the thing that we all care about first when we're talking about this. And decentralizing, distributing that network is key to that. But I think also it can make the remaining consolidated miner base more efficient because it's actually driving the processor technology itself. It's creating the demand for making more efficient processors. So each of these iterations where we go through, the price and the difficulty adjustment, everything, and the miner's relationship to that mechanism always makes it so that there are fewer, only the competing miners are going to last, right? They're going to become more resilient. And they're actually going to be having better processing technology for their mining centers. Does that make sense?
How's the technology going to improve? What's the impetus for that?
AI, there's so much demand for AI. They use the ASICs to do all the training and then the inference, depending on what's going on in particular center. That's creating the actual accelerated development demand for all the way down to the semiconductor level. So these products, these ASICs products, are then therefore going to be something that's available to the miners once they get back into their normal operations to be more efficient at mining Bitcoin.
I don't know too much about these AI processors, but my understanding is they use GPUs. Isn't that what NVIDIA specializes in?
There's a mix. Yeah. Okay. Yeah, I know. Well, no, they do ASICs too. They do ASICs. Yeah,
okay.
Yeah.
Oh, okay.
And this is theoretical. I don't have any data to support this, but I imagine that there could be a feedback loop there just through creating demand for more efficient processors.
It's going to be fascinating to see how that plays out because a lot of these Bitcoin mining companies got their permits to build out their data warehouses on the basis that, hey, we can switch off, we're demand responsive. AI is not demand responsive.
No, it's always,
it has to be on.
Pure reliability.
It has to be on constantly.
Yeah.
Because, if you build dependencies on the back of, Anthropic's LLMs, you want that always on because your processes are running constantly.
Yep.
And suddenly you get permission to build a data warehouse, buy all these resources and use them, water, energy, land, and then you switch to a non-demand responsive business model. That's a bit dodgy. That feels like a bait and switch. That I think societies, like a lot of those communities, they're like, hang on, this is not what we signed up for.
I mean, those are really intense, like the AI data centers, the hyperscalers, the power demand, the swings that they hit, they can be megawatt hour power demand swings from peak to trough. Meanwhile, you can have your mining operation for Bitcoin shipped out to the middle of Iowa or something like that and run off like a local wind farm or co-located on something like a small shed operation or something like that. It's kind of DIY. So
let's talk about Bitcoin price. We've just had, I think, was it a greater than 50% drawdown? Is that what?
Yeah, like roughly, yeah,
more or less, right?
People are wondering if we're going to repeat and go to the 70, 80.
And so one of my favorite things about analysts, especially when they turn bearish, is that they all insist that every bear market has to look the same, but they also insist that no bull market will ever be the same. Like it's always different. Because it's like, every bear market has to follow a previous fractal of 75, 85%. But none of them say every bull market has to follow a fucking 30x, for example, right? So
I don't know. I think you can look at the distribution of drawdowns historically. The drawdowns from all-time highs, like there's a mean that's actually bimodal. You look at the cycles and it's pretty obvious that most of them have gone down to the 70 to 80% or 85%. Drawdown regime. But what's interesting, especially I think since around 2018, 2020 to now, where the drawdowns from all-time highs, they're starting to spend more time in shallower depths of drawdown on average. So they're building out a new peak in the shallower end of the regime. But then there's lower peaks as well, right? Like each cycle on the bull run side, we've been a little bit more disappointed with respect to where we thought it would go. So yeah, the big question I think is relative to the bull run peaks, can we expect to see as deep of drawdowns as we've seen each time? And also, by the way, it's only 3 out of the last 4 cycles on the drawdown side that we've been kind of within the 70 to 80% drawdown. Before that, it was actually more extreme. So it was like big. But I guess my point here being that since 2022, the last bear market bottom that we had, end of 2022, which culminated with like coincided with the FTX crash. It's been very crab crawly. I call it like a crab crawl market. It has not behaved like a normal bull run.
It's almost.
If you characterize it with respect to each historical bull run, the most retail FOMO driven extreme one was which one? 2017. 2020. It was actually not as intense from the FOMO.
It felt like half a bear market.
It was like
the prior cycle, right?
This one has just. There've been like retail has not been around at all.
No.
Yeah, we went from that 16K to 126K.
Even just the interest on the timeline, very muted all the way through.
So it's starting to like not behave very well with respect to like Y coffee accumulation phase followed by like a hype, FOMO hype cycle sort of behavior. Kind of tying this back into the business cycle theory, that PMI. The way that it works is like, so it's like it's a collection of survey responses from supply chain managers and stuff in the private manufacturing sector. And what they do is they tell you directionally, is business doing better or worse? Are we getting more business or worse business along all these dimensions? And the middle, sort of the neutral territory is 50. So if it's higher than 50, it means that they're getting more new orders coming in, prices are going up, they're getting more deliveries coming in, employment is thrown in there. And if it's below 50, it means it's shrinking. Like they're doing less business going in that direction. So every past Bitcoin cycle where we've actually had a full bull run, those full bull runs, I call them, the kind of roughly every 4 cycles, have coincided with a pretty extreme rise in PMI going well north of 50. Financial conditions are loosening, becoming easier, higher risk appetite and all that. There are a couple instances where there's been a rise in price where you didn't see PMI show up and coinciding with it. One example is 2019, before we got to had the COVID crash and stuff like that. PMI wasn't favorable there, and we kind of had like a little bit of a half-ass peak there, and it kind of dipped back down. Then we had the 2021 peak, keep going. Since 2022, we've had the longest running contraction that's below 50 in all of PMI history. I don't think a lot of people realize that that was over 3 years. That's the longest running economic contraction from a PMI standpoint we've ever had. Yet, during that same time, the price went from 16,000 to 126,000. And we didn't have any FOMO, retail showing up for the FOMO side of things. So it really makes you wonder. We're kind of like in the early institutional adoption phase, I think, of Bitcoin's evolution. What's going to be around the corner now? Is it going to be like, is Bitcoin's price from where it is now, 63,000, going to get beat down? Because PMI actually jumped back up to above 50.
It started to turn
in January.
Yeah,
it's jumped. But the strange thing is that Bitcoin, like, it didn't get that excited, and then it kind of started trickling down, and like we're down in the depths of a bear market now. So like, what's going on with that? A couple of things on that is, one, mentioned price being one of the variables in the PMI. Inflation, right? We had the war, we've got all the tariffs, all this crazy stuff going on. That's doing a lot of the work for PMI. And that was the case from January until just like going into June, actually. The June PMI, other aspects of PMI started to show up, like the new orders, employment, deliveries, and things like that are starting to catch up to where price was doing a lot of the work on its own. Statistically, we need that PMI value, if this correlation keeps holding, needs to be well above 55. But we've kind of, between January and now, been just sort of gradually, we went to like 52 and we just hung out at 52 for a while, 53, now I think we're like 54.7 or whatever, 53.7, 54. What the kind of model says, if you just take PMI alone as a single variable, we need it to punch up, we need it to kind of start being a rock star expansionary territory again, which is north of 55. And that might be one of the, if from the economic standpoint, why Bitcoin's price is still kind of lagging.
Do you see a relatively quick recovery from where we are right now? Because when I map it to the last bear market, I think the bear market was done. And then we had FTX. I thought it was done. Around
and then that was the gut punch.
And FTX sort of just came out of nowhere.
Right. Yeah.
And it was a really quick recovery from that FTX crash.
Yeah, it was about three or 4 months.
Yeah.
Yep, that's right. I know exactly. It's like an upside down top hat.
Yep.
Yep.
It sort of wallowed in at the bottom for about 6 weeks, and then we got a shoot up, and then maybe another few weeks to months.
Do we have that around the corner?
I don't think so. We haven't had the excesses of last cycle.
Yeah.
And where people are pointing to Bitcoin treasury companies, but the Bitcoin treasury companies, where the risk may lie in pressure to sell is in the tail end, right? In the long tail.
Yeah,
they hardly hold any Bitcoin relative to the supply. Like, they're not going to change. They're not going to affect the price by selling Bitcoin. They don't hold enough to sell and change the price. So I don't know that there is any entity out there. I don't know that there's been the kind of risk-taking of last cycle.
Like a shock factor. Shocking. The last three, that's a good point, because I do this thing called like quantile modeling. Where the basis of it is the power law, but you're looking at the support, the lowest quantiles.
Clancy has worked on something similar.
Yeah, he works a lot on this as well. The interesting thing is the last three bear market cycles, there's always been some kind of event that shocked the system to the downside for brief number of months. Yeah. There was the FTX crash at the end of 2022, which punched us below the first percentile for like a few months. Then we started to do the climb. Then before that it was the COVID crash, which did the same thing. It was like a very like a V-shaped thing, and we were only there for like a month or two. And then the argument for, I believe it's January, I'm reaching back, 2015, something like that. We also experienced a drop below the first percentile. And you could make the argument that there was the block size wars that were happening, creating a ton of, and the liquidity, again, the depth of liquidity in 2015 compared to 2026 is like orders of magnitude difference. Something like that could have really shaken the certainty of the Bitcoin community in 2015. This is before any kind of institutions were coming to the fray. So again, it's a little bit like, you take that kind of explanation with a grain of salt, because now you're kind of like taking these events to sort of explain what the price was doing. But yeah, that's sort of like my base case is that like probably if we start to do the climb again this year, I believe, what were we? We just dipped below 60,000 very, very briefly. Right now, it sucks, but it's about 50-50 chance we're kind of past the bottom. A couple months ago, I would have said like 2/3 we're already past, but we already dipped below 60K. This 4-cycle theorists are rooting for us to reach this cycle low in exactly about October. before we start to make the climb. If that happens, then they're going to look really smart. But they won't look very smart if we hit the next all-time high over the next 3 years. Sometime in the next 3 years.
I've got a feeling there's about a 10 to 15% chance we could make an all-time high this year.
This year?
Yeah.
Interesting. Okay.
Yeah, it's a very small chance, but I can see that happening.
Yeah, I think it's much more probable like early next year. But some, I agree with you, some probability.
My base case is 80 to 90 by the end of the year.
Well, there's a lot of things that could come together this year. So was that like the Clarity Act? Mm-hmm. There's passing the resolutions. We got the 60-day ceasefire.
The end of war, the AI, all that sort of stuff. They could be tailwinds for the markets in general, increased risk appetite. I suspect that Iran has liquidated a significant amount of Bitcoin in anticipation of the war as well. And I think that had an impact.
Yeah, the payments going on over the Strait of Hormuz.
Yeah, and that's right. That's an incredible international geopolitical use case that I don't think people appreciate really. Like it's the perfect demonstration of Bitcoin's properties, right?
There's an analyst, Ben Cowan. He's absolute legend, right? All the respect to him. I both agree with him in some ways. I've been sharing my disagreements, I think, with his. He presents sort of a midterm year, election year seasonality chart where he shows like the cloud for every past midterm election year. And it tends to be a overall like a down year. And he even shows where we tend to have some of like the mid-cycle corrections and dips and things like that. That's great. It's still a sample size of 4 though. If there's some good explanatory power behind the midterm, I think midterm elections, it kind of makes sense that they could bring a lot of economic uncertainty, but we're going through a lot of change this year that's not normal. The economy's sort of been dampened for the last couple of years since this current administration. And we're looking like a lot of those dampening factors are going to kind of be lifted throughout the rest of the year. So who's to say? It's a huge amount of variation. We could start to experience positive relative returns to January by the end of the year. So I guess that's all to say that Ben Cowan could totally be right with us continuing like the overall bearish 2026 simply because it's a midterm election year. But there's like a pretty similar probability to us staying in that kind of median trend to breaking out of it and maybe getting back into the positive through this year. I still think it's more likely that we start to, like my base case is that sometime this year, we start to climb back up the next kind of bull run cycle and kind of would culminate in a peak sometime next year.
Yeah.
And I think the price could be really good too, by the way. I think we could be looking at 300K plus.
By when?
Whether it happens towards the end of this year to middle of next year.
300 plus.
Yeah, I'd have to pull up to look at the exact figures, but last time I looked, like if it were to happen at end of 2026, I think the range was like roughly between like kind of 250, 300K range. So it increased the capacity even a little bit more if it's like mid 2027. What do you think?
When I look at bear markets, I think bear markets really traumatize people and it takes them a while to get over that. And this bear market has not been traumatizing. There's not been sort of a market trauma. There's not been a crash. There's not been a
bit more like fatigue.
Event. I think that's what I think. I have a good friend of mine. She's an excellent trader. I won't name her.
Sure.
But she's been in Bitcoin since 2013. And I remember when Bitcoin was creeping over a sort of 100, 110.
Yeah.
She said, Bitcoin is tired, Archie. It's tired. It's been running for a while.
Boss.
Sorry?
I'm tired, boss.
Yeah, it's tired. She's like, I'm not seeing momentum in the charts. It might creep higher, but we're not going to see like 150, 180. And she's calling it like before it reached.
That's good. Yeah.
And I always listen to what she has to say. She reads markets exceptionally well. And she turned out to be right. It just kind of 120 and then sort of back. And then we had that event in October 10.
Yeah.
And I think that put people on edge. But I still suspect, because nothing came of that, no body surfaced to the water. And I still suspect that had something to do with Iran beginning to liquidate and prepare.
Okay, interesting.
Because the war drum started banging around about then. We started hearing more and more stories. They probably picked up on intel in war preparations. And then, it gained momentum once there was a war. So I think that had something to do with it. If that gets resolved, it could be really interesting. We could see some of that selling pressure reverse.
I agree.
And we could see very quick sort of recovery, not to all-time highs, but like beyond the bear market lows. That's for sure.
I feel like this whole season, this past, particularly since the beginning of this year, it's just been really hard to predict when these things are going to start getting solved.
Yeah, it's all conjecture, isn't it?
It's the 4D chess of the nation's figureheads, and like what we're literally at war. So
I don't think there's much 4D chess going on. The guy's a literal
That's
retard.
what somebody playing 4D chess would want you to think.
Yeah, he's an impulsive retard, really.
Just kidding.
I like the way the sort of the all-in guys, for example, were trying to infer all sorts of, genius ways of he was operating, and actually is just basically a bully and a thug and an opportunist who was, there's not much more than that. And that's quite clear now. There's no strategy. It's just bluff and bluster.
Domination.
Yeah, that's
acquisition.
pretty much what it is. I think
tale as old as time, right? It's like the story of powerful countries expanding, and
it's just the dumbest thing, and it's been the biggest slap in the face to start a war and then to just lose. So, like
nobody wins.
To start a war and strengthen your opponent, right? It's just just crazy. So I think a lot of that can be reversed. The AI stuff that's happening is great.
Sure.
The gold's expansion is, I think, good overall because,
Oh, speaking of mining, to add to your list there, there's the hash rate bear market, which I think is also indicative of what's going on with AI, the moving over. Those always finish up with a reversal in price. It's like this is the biggest one I think we've ever seen.
Interesting.
Yeah, I forget who's exactly been posting about it. I think price for sure though leads hash rate generally on average. There's pretty good consensus among analysts. So assuming that that's the case, we're going to see an upward price movement before we see that to make its correction.
So to finish up, give us a price target and a time. End of year.
Well, what year?
End of this year, end of this year, and then like end of peak cycle.
Target, not prediction.
Target.
By the end of this year,
I'm going with 80 to 90 by the end of the year.
Not having anything in front of me. I think that's realistic, what you just said. I don't have a problem with that. I think we could even be disappointed, potentially. I think it's more likely that we're going to start climbing than not. So I'd probably say 80 is more likely than 70. So 80... maybe even 100.
Yeah,
maybe things can turn around quickly. So I'll say 80. I'll just up you by 10 on the upside. So I'll just say 80 to 100.
Bear market over by the summer. Sell in May, go away. That's sort of playing out, right?
I don't really. I mean, at this point, it's like I don't really care. I mean, if we start to make the reversal in October, great. I'm happy for all those bears to look really smart.
No, I think the reversal is here. It's
Sailor said Bitcoin summer, right?
Yeah.
So there's that. But yeah, no, I think in all seriousness, I think it's possible for us by the end of the summer to start making I'd say that's a little bit more likely, but it's tough for an analyst right now. I think it's, again, when exactly things will be resolved. We don't know when exactly the news is going to play out. So I think 50-50 whether we start to climb up positive again by the end of the summer, but I'm more confident by the end of the year we'll be higher than what we are today. I guess that would be my conservative statement on that.
Awesome, man. Well, on that note, thanks again for coming in, our first interview, and hopefully look forward to many more. And I really appreciate you coming in and talk to us. Tell people where they can find you online. Yeah,
online. So I'm primarily on X. So my audience follows me there, at Sminston_with. And I recently started a YouTube channel. So I'll have to pick your brain for some advice on that. It's also Sminston_with at YouTube. I'm basically covering the same stuff that we were talking about today, mainly charts. And then I'm bringing up a website here. It's not 100% done yet, but I'm planning to launch it kind of in the next month. And that'll be sminstonwith.com.
Awesome. Thanks again.
Thank you, Archie.